Welcome to Bitcoin Technical Analysis. Today with George, a technical analyst, Tone from Brave New Coin, and BTC Vix from Whale Club TeamSpeak. Thanks for coming on today, guys.
Thanks for having us.
Thanks for having us.
Yeah, thanks again.
Great. So, George, you wanted to talk about a few things going on in different markets?
Yeah, so I'm going to talk about the U.S. dollar interest rates and the S&P. Pretty much what I'm seeing in all these markets is a giant amount of uncertainty and a lot of consolidation patterns going on around that uncertainty. And the uncertainty that's really overhanging every market is what the Fed's going to do. So that should be known in a relatively short time span, but we should expect a lot of volatility in the meantime, and we're starting to get that. So here's a chart of the U.S. dollar, and it continues to be in an uptrend, but it's been consolidating in this uptrend, really not going anywhere for quite a bit of time. But you know, the RSI and the MACD are kind of telling you that it's in a positive direction, but it's just consolidating and waiting. And I'm imagining it's waiting to see what happens with interest rates. And if they rise, the dollar potentially could get stronger, or it could go down. There's two camps on that. I won't go into too much detail on that, but here's a chart showing interest rates. This is the 10-year. And it's in pretty much the same place as the dollar, as you can see. You know, MACD has crossed over. It's about 50 on the RSI. But what's really interesting to me about this chart is if you look at all of the exponential moving averages, they've compressed. So it looks like it's going to make a big move in one direction or the other based on what happens out of the Fed. Expect some volatility out of that move, obviously, but I mean, it's coiling up and looking like it's going to make a pretty big move in one direction. Next chart I have is I'm trying to get some kind of hints on where interest rates are going, so I put up a one-year Treasury yield chart, and this is one of the shorter ends are kind of in uptrends. The 2-year, 1-year, 6-month are pretty much in uptrends, but I mean that's saying maybe rates rise, maybe not, but the short end is starting to come up. That's an interesting sign. I think that you could probably bet on the fact that rates will rise by the end of the year here. So here's a chart of the VIX, and one of the things that I've been looking at with the VIX lately is the 25 level. And when it gets below 25, I'm feeling like that's good territory for the S&P to make a good move, and kind of that the volatility is coming in, and that you're going to see some good upside. Well, today you got this big candle here. Started lower and went all the way up. Obviously, as the S&P started higher today and then collapsed utterly in the last hours of trading. But this is probably going to provide for more and more volatility going forward as we head towards this Fed meeting. And I mean, this is basically the VIX for the S&P, but you can expect that in most markets going forward. It's going to be really jiggy in here as really we try and figure out what the Fed's thinking and what the moves are based on that. So here's an S&P chart today, and we still have that 1860 level as the bottom, approximately. Still in a big downtrend here, but going up and down, up and down. You can see these big moves that have been happening, and you can expect more of that. As long as 1860 holds in here, we should be able to bounce around until the direction is determined. But for now, that looks like the bottom in there, but we'll see. And the last chart I have is commodities, and really I like this chart, and I think that it's been stronger lately, and for a couple of reasons. The dollar had, like I said, while it's been in an uptrend, it's kind of subsided and it's resting. So commodities had some room to run, along with rallying from a really oversold level, and with the S&P and other markets in general. Maybe it's just a rally within a counter trend rally going lower, but I mean this could be a bottom forming, and it looks like you might even be getting a flag pattern in here right now. RSI is strong, coming off of a big oversold level, and the MACD is rising and looking like it's going to cross over the zero pattern. I think obviously you have the 50-day in front of you here at 203, but Oil was off today. I'll let Tone talk about that, but commodities seem to be kind of getting into a better place than they've been in a while. I'm in wait and see mode, but they're definitely improving compared to where they've been. And like I said, I think you could expect more volatility, and that's really all I have today. Thanks.
Okay, thanks a lot, George. Okay, Vix, what's going on in the Bitcoin world? Has there been any movement in Bitcoin, or is it just flat?
Yeah, actually, we did have a little bit of movement. We were heavily consolidating for quite some time in this 220 to 230 range. We had a decent breakout. It looked promising for an up move, maybe even into this like 250, 260 level up here. But I feel like this rally is kind of stalled right now, and we're even getting a 12-hour pivot that printed as of the last candle. So let me zoom in a little bit on the market internals that I'm talking about here. So here's your 4-hour chart. We look at basically the wheelies rolling over with RMI. As well as we tag this 200 EMA. So from my perspective, I'm just not seeing like a real compelling bull case here. We had a good shot when we cleared 240 here. I thought the bulls would take control and make a run up to that 260 level. They seem to just kind of stall out here. So doesn't mean I'm necessarily getting uber bearish that we're going to retest 200 or something like that. But really, I think the market internals, even on the 4-hour, need to reset before we're gonna be right for another run up at least. So maybe we just fall back into the 220 to 230 level and sit there for a while again. So I really don't have too much as far as that goes. I can zoom in a little closer. Here this has me a little bit bearish here. It looks like we're just kind of bear flagging out of this recent breakdown. No real compelling buying pressure being put on. So probably just kind of bleed out and take a couple big candles down here. So that's about all I have right now. It's kind of a quieter day that I'm not in position, but I did happen to take some advantage of the rally that ensued earlier, but I'm just less confident now, I guess is what I would say. That's all I have.
Okay, thanks a lot, Vix. Tone, you wanted to talk about S&P and some commodities?
Yeah, sure. I'll start off with Bitcoin just to follow up on what Vic said. This is my standard chart that I use in my reports and what I do at Brave New Coin. I actually may not be talking much about Bitcoin going forward because they just put up a paywall on my Bitcoin work and these kinds of reports and charts. So otherwise, it doesn't make sense for paid subscribers. But what I'm looking at Bitcoin, again, I'm completely neutral right now. The little $10 move from 230 into the 240, 245 zone, it was great. I did not take advantage of it. I wasn't trading this because I'm waiting to see what happens at this giant point of resistance where you have the 50-day moving average, the 200-day moving average, my horizontal line that I've had since like January, the first week of January. This 250, 255 resistance zone is just a monster. It was a monster support as well, and when it cracked, yes, granted this was all Bitfinex, but once 255 was given way, the entire bottom dropped out. So I'm looking at the same zone as being very critical resistance, and I have my doubts whether it can crack it. So I'm not really touching Bitcoin. It's nice that the RSI and the MACD and momentum is going up. But unless I see a major breakout past this 255 area, 250, 255, or a clear rejection at that area to take us back down to the low 200s, I basically want to see what happens. So it'll be like another week or two before we get a resolution. So that's my view on Bitcoin at the moment. So I wanted to follow up last week when we talked about gold. So this is a screenshot from my actual broker that I used to trade. And I mentioned this trade last week, but I didn't have any screenshots of what I actually did. So this was my short position on gold, and I entered it. I'm just going to draw right on the screen. I entered it right here. This was my entrance, that blue circle. But I entered it before the spike. So after I entered it Sunday night, the 24th, and then Monday was the huge crash in the S&P. It shot gold up only $10, which was just unbelievable. You'd think gold would have more strength, but it didn't. And after that, it started to go down. I became very comfortable in the trade. This is my stop loss at 11.51. I put the stop loss in around here somewhere. My previous stop loss was kind of high. I like to give these things some leeway because this was a swing trade. And I've been short ever since. I did not get out at 11.20s. In hindsight, would have been great. Once it started to go down, I think last week when we did this session, I believe this was the candle that was forming, this red candle right here. And I said I was very confident because it couldn't break 11.50 on the way back up and will probably go down. My exit was 11.0250. I left it as is. I took the screenshot right before the exit. We bottomed out at 1100 earlier today, and I believe right now we're at around 11.7. I'm very happy with this trade. It was great. So what I'm looking for going forward, I am still very bearish on gold, but a huge down move like this, especially when silver barely moved down at all. So this might have been specific to gold. I think there could easily be a bounce, and 1100 is a very round number that things like to gravitate from and to. But if we bounce back up to 1120, 1125 area, I'll be more than happy to go short again. Another thing that would get me short would be a consolidation here and a break under 1100 with some volume. Again, also look at the volume. I mean, the volume is very small. It's a huge red candle with volume smaller than the volume around here, and that's not all that bearish actually. I can definitely see a rebound. And another thing that's forming here, you can kind of put together this descending triangle, kind of like that, and we get a huge breakdown. But these breakdowns, let me get this straight here. Yeah, nice big arrow here. But these breakouts never happen in one fell swoop. I can easily see a pullback up, and come on, stay, and then we go down. So that's kind of what I'm looking for in gold. Let's quickly talk about oil as well. I've been just scalping oil. I can't. I'll show you the day chart in a minute. This was my little day trade. These are 10-minute candles. Let me just do this right there so you can see 10 minutes. So these are my 10-minute candles. And I just took a quick trade. Again, it looked like it was breaking down off of 45. I said, okay, let me go for it. And of course, I was wrong as usual because this is what oil has been doing to me lately. I think I went short like around here somewhere or the previous candle. And immediately it went back up against me. But I went short for a reason. I was willing to give it a lot of leg room. And I know it doesn't make sense to be risking so much to gain so little. This was my potential gain, and my initial gain was actually even smaller. I kind of lowered it. So that is a lot of risk. But I was pretty confident that oil could break down under 45. It went against me. That wasn't good. But once it came back down and it went under my 45 again, then I became very comfortable in the trade because it made a lower low. And that's pretty much how I've been trading oil. I could have easily went long here, and I would have been out prior to this, or I would have set a break-even stop. So you just have to pick a direction and try to scalp it. At least that's been my strategy. I am not swing trading oil. I would have been happy to get out at 44.67. Here is the day chart on the same trade, and this was my exit. And the exit did hit in the early afternoon, And right before this, this is the latest screenshot, so you can see the difference, 44.87. I was hoping to hit 44.67, and it eventually fell all the way to 44.32. And again, you can now start to put together this little triangle here. Very similar to what gold is, and now here we go. So the probability says we go down. I don't know how far down. I probably drew that way too low. But again, I'm not willing to swing trade oil. It's bitten me several times. I would rather take my chances in the direction. I am willing to hold a swing trade if I need to, but usually within 12 to 24 hours, no matter what direction you chose at any of these levels, as long as you gave yourself a little rope, you would have been able to exit the trade for a scalp. It's not the most efficient way to trading, but it's been kind of working for me. Quick comment on the S&P 500, which I'm not trading at the moment. Again, it's hard to make heads or tails. I just found it very interesting that, oops, hold on a second here, that the rebound took us exactly to the previous high, and then it was all over and we fell. I wasn't really watching it. I was too busy watching gold and oil. But again, right, you can start to draw these triangles here as well. Like I said last week, I think S&P is going to be very choppy for the entire month of September. I would not be surprised if there is a major scare and it goes under 1900, but I also think that the intraday low and the close of day low, I believe these lows will hold. So this should hold on a end of day basis. This should hold on the intraday basis, and whichever one of these was a Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, so it looks like on a weekly basis we're going to close lower, but I'm looking for the daily close and the intraday lows. I'm looking for those to hold, so even if there's a scare, I'm still pretty bullish into end of the year. All right, hope I didn't take up too much time, but that's pretty much my outlook on all these markets.
Okay, thanks a lot, Tone. Yeah, I'm just going to talk briefly about gold, even though a few people have already mentioned it. Yeah, I'm also, feel the same, that pretty bearish on gold right now, and on the chart you can see that it just broke out of the daily Ichimoku cloud. After it broke the red line you see on the chart, then I also thought, okay, this thing is going to keep breaking down and probably challenge the cloud. Also, you can see there was one, kind of rallying up to, nearly 1160, and then back down, and then another attempt, and that failed. So whenever I see this kind of, failed rally, and then it just kind of consolidates, there's a lot of good chance that it's just going to keep going down. So I even think it could go down to that 1080 range that has already been down there. There's a lot of support down there. If you look at the past candles there was a lot of buying going on around that area. So I think it could challenge that again. And that's all we have for today. Thanks for watching. Watch us again next week, same time, same place. Don't forget to thumbs up and subscribe. This was Bitcoin Technical Analysis on World Crypto Network. See you next time.